Thanks for joining us at xm.com. You're watching today's market comment by Haralan Buspisuras. I'm Cristina Marujas. The US dollar traded higher against its major counterparts yesterday, gaining the most versus the yen, the kiwi, and the loonie. The greenback continued trading on the front foot today as well. Investors are likely expecting a hawkish outcome from today's FOMC decision, and this is evident by the fact that they continued pushing back their rate cut bets to 75 basis points, in line with the Fed's December dot plot. Therefore, the Fed's updated interest rate projections may be of major importance today. With the U.S. economy faring better than most its major peers and inflation proving to be stickier than expected, there has been speculation the dot plot may be revised up to indicate 2 quarter-point rate cuts by the end of the year. Such a decision would provide room for further upside adjustment to the market's own implied path and thereby add more fuel to the dollar's engines. The yen was the main loser, tumbling more than 1.5% even after the Bank of Japan's historic decision to end 8 years of negative interest rates and entirely abolish its yield curve control policy. Investors still believe that any subsequent rate increases are likely to be very gradual and slow, assigning around an 83% chance for the next 10 basis points hike to be delivered in September. For the yen to change course and begin a long-lasting recovery, data and headlines may need to start suggesting that another rate increase may be appropriate sooner than the market expects. Otherwise, further declines may trigger another round of verbal intervention by Japanese officials. The Canadian dollar was also among the major losers, getting knocked down after the Canadian CPIs for February came in lower than expected, prompting investors to add to their Bank of Canada rate cut bets. The probability for a 25 basis points reduction at the bank's upcoming decision has risen to around 25%, while the total number of basis points worth of cuts expected by December has increased to around 75. On Wall Street, all 3 of its main indices closed in the green, with the Dow Jones gaining the most ground. The chip-making giant Nvidia erased early losses to close 1% up after it revealed details of its highly anticipated Blackwell B200 artificial intelligence chip that could be 30 times faster than previous chips. Although equities could pull back if the Fed appears hawkish today, the Nvidia story suggests that AI-related future growth opportunities are not fully factored into the market. Thus, any Fed-associated declines may be seen as a corrective phase, providing renewed buying opportunities. Thanks for watching today's market comment here at xm.com.